Hey guys, and welcome back to the channel. We're looking at the 4-year cycle, well, at least our 4-year cycle, and how this is repeating like clockwork. Now, there's many parts of the 4-year cycle, many of which we've obviously covered here on the channel. Today, I want to go through more so on the timeframes and also touch on the market sentiment and how we're seeing these patterns repeat time and time again. It's a follow-up from a previous video so that we can update the analysis to see how things are remaining on track for this stage of the cycle. So if you like the sound of that, make sure you stick around, hit the like button, it does go a long way to helping out the channel, and of course subscribe if you are new here. Plenty of links in the video description. I'll talk about those later as we've got some big things coming up this week. But for now, you're here on your home of macro cycle analysis with me, Jason Pizzino. We cover Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, with that in mind, let's kick it off with another fantastic quote from one of my favorite traders of all time, Jesse Livermore. There is nothing new in Wall Street. Pretty much be left at that. But there's nothing new in Wall Street. There can't be, because speculation is as old as the hills. If you are unfamiliar with Jesse Livermore, he traded in the early 1900s, so over 100 years ago. Whatever happens in the stock market today has happened before and will happen again. We always think that everything is new. There are things that are different this time and things can't possibly repeat. But these guys have seen it all before. It's happened throughout the decades, throughout the centuries, and it will continue to happen again. It just gets dressed up or spiced up as something a little different. And this leads into my news headlines, a brief look at the news headlines today. Bitcoin to break 90 grand if Donald Trump is elected. Some folks think I'm against Trump and I'm for Harris or vice versa. I honestly don't care. I don't know how many times I have to say that. I don't care who the president is. What will happen regardless of which one is in. Whoa, hang on there. It does trigger a lot of people to say that. How can you possibly say it? Everyone's different. No, the cycle is the cycle, and maybe they'll affect certain individual areas of the cycle, but overall, the markets are up, and no matter who is in office, they'll continue up until they don't. All right? For the sake of the Trump lovers, you probably don't want to see him in for this next 4 years, because at least in my opinion, from my analysis, what I've been sharing with you guys for the 18-year cycle as we cover here on the channel, it's likely going to be a pretty tough time after around 2026, maybe looking to 27, 28, 29. Those years could be pretty bad. And if Trump is in office, well, he'll get the major blame for it. But of course, he'll deflect it to say it was the Democrats for the previous 4 years. And of course, he had the previous 4 years. It's basically politics, and they do the same thing over and over again. Just blame each other for what goes on. So enough of my early intro rant here. We want to look at the 4-year cycle. And the point of this is it doesn't matter who is in office. Don't get too carried away with it. It doesn't matter. At the end of the day, you got to look after yourself, your health, your family, your community. And so don't get swept up losing energy to these idiots in office, because essentially what's going to happen will happen. And right now, the cycle is up, and it looks like we're going to see further upside for the stock markets, for real estate, obviously blue chip areas, and probably Bitcoin, as I've been covering here on the channel. So that's the first bit of news headlines. The other news headlines were Saylor predicting 13 million in 20-something years. Of course, it's going to make a headline of someone of his significance in the space, predict something in 20 years' time for $13 million. Again, it's almost like a Cathie Wood thing here. Just talking about how ridiculous some of these price targets are. At least you guys, I've put this out here, you guys have given me a little bit more hope for humanity that with your responses here, you don't care who's in office. You understand that this is just part of the game. And that leads me back to this comment here. There's nothing new in Wall Street, and you're seeing it, and we're all part of this. We're seeing how this market is continuing up. With that in mind, over to the charts. We're looking at the S&P 500. Yesterday, had an up day. Bitcoin also had an up day, and the NASDAQ had an up day as well. Short term, had a bounce off 50%, but overall, still not out of this trading range. The targets to the downside, well, at least the support levels for the macro bull market to continue have not changed. They're still sitting at $4,600 to $4,800 for the S&P 500, essentially looking at that as a first sign of an invalidation to the macro bull market for the S&P 500. The reason I continue to bring that up is because we see different economic announcements, different bits of data that being released day to day. And of course, we have the interest rate announcement in about 8 to 10 days time. And provided the price chart, the price here for the S&P doesn't go below these areas. So here's your 50% at 46, and then the previous old all-time high at 48. Provided the price doesn't go under that, it doesn't really matter what happens in the short term here for that macro bull market. It's essentially the sellers coming in, wiping out some of the weak paper hands, and then the strong buyers coming back in, the smart money, if you will, picking up those lows and potentially forming some higher lows above key support levels. And I've got another piece to have a look at that when it comes to the NASDAQ. But first, we'll just have a look at the US dollar, as this has been playing pretty well to the analysis for coming down, for weakening in the second half of the real estate cycle. We're in the second half, we're coming into that, well, we're kind of in the winner's curse phase, basically, where we're seeing more prices go up for the assets. As I said, real estate, Bitcoin, stock market. Longer term, you are going to have pullbacks like we have seen with the stock market, but you can see longer term since COVID, which is basically the start of that second half of the real estate cycle, higher lows on a macro scale here. Basically, a bit over a year and a half to the upside and 10 months to the downside. Again, we've gone up for a very long time, nearly 2 years. So you'd have to expect some sort of consolidation before the market continues on. And in the case of the US dollar, we're still expecting this to fall. In the short term, however, probably going to see a bit of a fluctuation here. A little bit more volume has come into these up days that have started to show up. And to the upside, should the US dollar continue up, resistance levels sit at 102.3, 103.3, and then back towards those previous tops there around 104.5. So overall for the USD, it has some area to move, especially with this volume, but nonetheless, if this starts to fail at each of these levels on the way up, you get a rejection here, maybe a rejection at 50%, over the coming months, I would expect the US dollar to continue down and then start to break down from 100 and then 99, which could send this thing flying down, which could be the next catalyst for the assets to continue up, the asset prices to continue up, as I covered in yesterday's video doing a major summation of everything. So I'll leave a link to this at the end of today's video. I just wanted to update that in the US dollar today, in today's video, because of those last couple of days with that little bit of, well, increased volume, comparatively speaking, to the last several trading sessions. We really have not seen any uptick in that volume since the move in June, where it basically fizzled out and then started the next collapse. Over to crypto, and we'll cover obviously a big one here with Bitcoin and the 4-year cycle, or our 4-year cycle. I want to differentiate that between the old halving cycle, as that's, I think, screwed a lot of people. They think that the cycle has to perform exactly like the other halving cycles, where Bitcoin didn't go to an all-time high previously and this time it has. I like to put that to the side because that doesn't really mean anything when we're looking at price and time patterns overall. Let's start with the fear and greed indexes. This pattern has also continued to repeat to date so far with the market sentiment. Fear and greed on the crypto index today is at 33, so still in fear. Yesterday was fear, last week was fear, and we had to go back to the 6th of August, so just over a month ago, to get into that extreme fear at 17 and then 20. So an interesting point to note are the dates here. So the 22, 23 is basically an extreme fear, right? That's the 6th and 7th of September. Now, we start with the 4-year cycle going back to 2020, and we'll also look at previous years as well. We're looking at some of the dates that Bitcoin likes to turn around in, especially before the next big move. This will take time. These are daily bars, okay? And then when you're looking at it in terms of time, there's the correction. Let's start from this little peak here. There's into the correction. That's 4 days. And then just looking at the breakout there as it started to break to new fresh highs, that was 50 days. So I don't know about you, but I have a fair bit of patience when it comes to the market. I guess if you've been following the channel, you can see the patience that I have. And I just continue to follow the signals until otherwise. And for now, the signals have not suggested that Bitcoin is about to go into a major bear market like it did in 2022. Of course, it has corrected for 6 months, but in the macro sense, Well, it's still above its 50% level. It's still above key support levels. Back to the days here. Getting a little sidetracked. Look at these dates here. You got the 6th and 7th, but yeah, for September, 6th and 7th. 4 years ago, there was also a very significant low here on the 5th. You had another one on the 8th, 23rd, 2nd of October, and then the market started to break a little higher. We can take this to 2021. You had a very emotional day on the 7th, another day 13th, another one on the 21st, and then basically at the 29th and the breakout on the 1st also showed up at the end of the month as well before you started to get this clean move to the upside. Now you take it to the bear market year. So this is the time where overall things are looking quite negative, but we're just looking for turning point dates here. The 7th, pretty significant turning point for that time. So just remember, we're comparing it to that time there. The 7th, big pump up here from 18.5 to nearly 23,000. Comes back down to the 21st. That's a seasonal date. The guys who are following and understand the seasonal dates just continue to follow those dates up. We've got another one coming up in about 11 days' time. Here's a little turning point here on the 4th, so early in October, mid-October for the 13th, and then that takes us into November, into that quarter 4. Fast forward to 2023, and another little look at the dates here. That's end of August. Here is the 1st of September, the 6th, the 8th, so not really anything there. I'm not trying to curve fit anything here. I just want to look for the very significant dates. The 11th, September 11, very, very emotional date. If you remember 2023, September 11 in the market in Bitcoin was an extremely emotional date. This was the time when the bears thought that they were going to see sub $20,000. They barely got sub 25,000 before a very quick reversal. Only lasted under 25 grand for a matter of minutes and then reversed from that point. Work your way into mid-September or sort of around that seasonal date again, the 21st. So here is a date here on the 19th for a turn, pulls back into the 25th, and then you start to get that breakout in October. Here are those early dates in October, 1st, 2nd, high low on the 11th. Remember we had a low on the 13th of October, very significant low because that was the exact stock market low. Only FTX could collapse the market a little further and it only remained under here for a couple of months before breaking out. So again, here is your higher low on the 11th above the previous trading ranges, and another little one here on the 25th, so close to that 21st date. And then later in October, the breakout, high low, and then this big breakout here. You can remember a few traders were trying to short this period here. They were trying to short 32,000, and then basically Bitcoin ripped those guys a new asshole, 35,000. It kept going to 44,000. They were still shorting the market, and they basically got absolutely annihilated. I don't know if they've come clean on that, but that's a story for another day. But anyway, Bitcoin absolutely ripped from this August, September, October period. I don't know if it's going to rip again like that. We did see some pretty good moves in 2021 as well. Here are those September lows. So remember those dates that we looked at, pretty similar. There's like an early in the month, a mid-month, and then later in the month, leading into that early October, and then basically push to a new fresh high there for October and November. Going back to the 4 years again in 2020, that's the repeat. As for the 4 years prior to 2020, so looking at 2016 now and September and how that all played out, a little low here on the 1st. So basically that was the higher low on the 1st of September. An emotional day right there, the 11th of September. Remember, we've seen that multiple times in the market come up for the 11th or just a day or two either side. Another higher low here on, guess what, the 21st. And then you start to get this ripping happening in around mid-October. Sometimes it's early in the month, sometimes a little later in the month. Here's October, and then it started to rip again. So that's a pretty decent move out of what was a very, very severe correction for the time. So this is Bitcoin going from 785 down to 483. So a 38% correction. So far, we've seen a 33.5% correction. But remember, we've got a lot more money in Bitcoin now. You'd expect the volatility to reduce slightly compared to the old days. And so far, it's kind of doing similar things here in terms of the corrections, and being 10 days into September, maybe we're going to be along similar lines here for some of these smaller turns, some of these more emotional days that come up in this time frame of the month before you start to see things rip a little more towards Q4 or later in Q4 as well. Now, just so we can cover every single 4-year presidential cycle along with the same year for Bitcoin before you get that big rip up into the final year of the cycle, we'll take a look at 2012. Now, it wasn't as significant as the previous two, the ones we saw in 2016 and 2020. There is a turning point here on the 2nd to another turning point here on the 20th. So we've looked at the date of the 21st as well, which led into early October, which we've also seen many times. We've seen that date of the 21st of September. And then you saw another decline here into late October. The outcome or the why this happened could potentially be because of what you saw in August. Huge move from $16 down to $7. So basically a massive volatility shakeout for those few days, and then the market just had to recover. Nonetheless, the point being is those turning dates. Early in the month, you got a little date here on the 8th, not going to consider that too much, but looking here towards the 20th of September as well. Basically had that big run up, shakeout, and then the market had to stabilize again before it was able to go on its rip for Q4 into Q1 of the following year. That's more of a granular look at the dates themselves. This one takes it to a higher level look at where the move begins, what I've got written here, just looking at each of the previous cycles. M is for month, 21, and the number here, 21 and 28, are for the number of months from the cycle low, from the exact cycle low. I'm not using made up cycle lows, just the exact cycle low. So you can see the measurement here, 21, but what I'm going to do is start from the previous cycle and work our way backwards to see where we're at in this current cycle. We're at month 22 to the previous cycle, 2018 into the peak of 2021. You got the low 22 months out. You had a start of a bit of a rip here at 22 months. That's 21, 20, and 19. So take it back to that month there. I'm calling them the starts of the moves because you've got consolidation, and then when that following month decides to break out and get a close above previous resistance levels. So that monthly close above previous resistance levels is a key area that I look for that move to begin, because from that point, your psychology basically gets destroyed if you're not in the market. So if you're waiting and waiting for clearer signs, for uncertainty to come through in the markets with the elections or the stock market or bits and pieces like that, you're basically just waiting and waiting on the sidelines. From these points, if you're not in there, you can still get in. There's nothing wrong with it. But in terms of your psychology, it gets more difficult as the bull market begins to run away. Now, of course, I don't know if the bull market is going to guarantee us a runaway bull market. I'm obviously preparing for that because of what I've seen previously, and I'd rather be prepared than not prepared and hope that the market continues to crash or you get some major correction in the stock market, which I don't think is likely at this stage. So just looking at the previous dates here, once you get this sort of move beginning around this period, month 19 and month 22 of the cycle, there's really not too many months left until the peak. For some, it'll sound like a forever time period, but when you look at how far we've come from, it is less than half to go. So that is 16 months left at 19. At 22, you are now at 13 months left. So maybe just a touch more than a year, best case scenario. Of course, I'm not going to just call it at that. We'll have to wait and see how the market plays out. These are very, very long time frames, but I just want to be prepared with some sort of time frame in mind. So I'll have a look at the cycle prior to this. Keep in mind, month 19, month 22. All right, now we've got a gist of how this works. Low, 21 months out, I've got a month close here above all of the previous start of the bull market. So here's the start of the bull market, and you've got this month here with a nice move. I remember this period, as that's basically when I started to get into Bitcoin early in 2017, talking about it, getting into 2016. I just didn't get in at that time. And these times here was when China was banning Bitcoin. So it really was like the end of the world. These moves were quite dramatic, and it did seem like it was game over. 35% down just in that 1 month alone. And then from that peak, was exactly what we've done now, 33.5%. That's what Bitcoin's done from March to that low in August so far. So it did that 2 months in a row, leading into that previous old all-time high, and was not able to close above it. However, this is what I was saying here. It's basically like that last chance before the major breakaway move. Take it off log and you'll see why. That's basically where the price is sitting. That is a psychological fuck. But if you're just looking at it in terms of the move where it begins in the months, well, 21 months is that first little higher monthly close. One could argue here, but again, it's sort of testing this top going back to June 2014. Nonetheless, let's stick with 21. That's 17, there's 21. And then to the breakout above the old all-time high, you could look at it as month 27 or month 28. So again, around that similar period, 21 to 28, the cycle that we just looked at was 19 to 22. And how many months are left from the peak to that big breakout bar? Only 7 months left. Month before, obviously 8. And then all the way back to this month on the breakout, the highest monthly close there, 14 months. So really not that long to go, considering how much time has already elapsed. Now, let's step it up a gear, and you can go back to the cycle before that, basically this Genesis cycle. I'm using this as the low, the October 2010 low, for reasons that we've covered before. Let's look at the timeframes here. 20 months to this breakout point, basically a monthly close above this swing top, and then another monthly close above this monthly top. Those numbers are month 20 and month 27. There's month 20, month 27, just to make sure I've got those correct. And like I've got here, this is your like last chance. You got 7 months as a last chance. Having said that, it sounds stupid. I know. You got 7 months to have a last chance, and it makes for great YouTube titles. However, what we've just been through is 1, 2, 3, 4, 5. We're into the 6th month, and these could all be considered last chances before, if there is a breakaway move. And when you look back on it, or maybe when we look back on it, right, that could be considered an easy entry opportunity before the market takes off to Michael Saylor's target here of $13 million. Obviously, that's nonsense. What I'm talking about here is you can see how easily 6 months gets away from investors, and it seems like it's not possible. There's no chance to be in the market at this point. It seems like it's going to collapse, and it just takes everyone by surprise until you see this major breakout, which then screws the investor mindset and it basically takes off without you. You're looking at 80 grand, then you're looking at 90 grand, and you think, why didn't I get in under 60 grand? Why did I wait so long? Because you don't remember what it looked like at the time. You don't remember what the psychology was at the time and how bad the market felt. So take this how you will, implement it into your own plans how you will. If this is in fact month 22, well, which it is, looking at history, you could potentially say that we have roughly about 13-ish months to go, which would take us out to Q4 of 2025. I've given several timeframes to look at, or at least what I'm watching. Q4 of 2024 is one of those. Q1 of 2025 is another one of those for reasons that we've looked at with the total cryptocurrency market cap and the altcoin market cap itself. I'll go into these in future videos because I don't want to make this one too long. Nonetheless, coming back to the current timeframes here, if we were looking at 19 months, well, it was getting close. It had a pivot point here, tested $72,000 again before a pullback. The low so far has come in at 21 months. If September happens to hold up higher than August, well, that makes us 22 months. And if September either breaks out to get to some higher monthly closing prices, say above sort of 66, 67,000, that could then easily put it in the camp of the move beginning. So what you'd have to see is a September close somewhere around here, and that would turn it into a green bar, of course, and that would potentially mean that we've got the start of the move here at 22. Otherwise, if it happened to be October, then this would probably be one of the longest periods for the start of the move. You can see these previous ones. I've got it here at month 20, month 21, month 19, and then the second final move here where you basically don't see prices come back, month 22, month 27, and month 28. So if we looked at those longer term, seeing as we're in month 22, month 27 takes us out to February, and month 28 would take us out to March. Basically a clear breakout above all these tops, meaning it doesn't just have to close above the March top, just above March 2024, like at 74,000. It could in fact be well and truly above that by that stage and then close above it there. So these are longer term charts. That's something you have to play with. Look at it here, right? That's the example there. October 2020, it could have just closed at 12,500. In this case, it closed at nearly 14,000. So there are some differences here in terms of price, but in terms of what it does in that month, it seems like we're looking for Q4 or Q1 in 2025 for these potential significant breakouts of this accumulation range. Now, I had more numbers and data to get through for the altcoin markets, but not to make it go too long, I'll wrap it up there and just remind you that the free crypto and economic report is coming out today. A link to this is in the top of your video description, so make sure you subscribe to that, check your inboxes, and of course, check your spam as well. We've got updates here for Bitcoin, for stocks, the stock markets, and of course some altcoins and the real estate market as well. You'll also get access to the free Discord with trading results, trading updates that Michael and I put together for our subscribers, and more TIA reviews over there. Thanks once again, guys. Hit that like button, subscribe if you're new here and you made it through the 30-minute update video here of the 4-year cycle. What I can see repeating. Short-term analysis coming up in tomorrow's video. Things aren't looking too bad. Otherwise, check out Michael's video, which I'll leave a link to in the video description. Take care and peace out.